Hello, hello, hello. How's everyone doing today? So I had this video planned out on the weekend, but I never got to it. So I'm just pumping these quick ones out so all of y'all have some stocks to look at, because I honestly think PayPal is undervalued. So PayPal is one of those stocks where you really want to get into it before it goes up, because I doubt that we're ever going to see these prices again. So just let me know if you guys can hear me. So this is going to be a very quick video. I wanted to make it live, so if there's any interaction, we'll definitely go in and answer any questions. But I doubt there will be any, because this is a stock that no one is really talking about. These are the stocks that tend to make the most sense, especially watching how much they've dropped. So if you look at how PayPal's been doing right now, it used to be at highs of $310. Now it's literally at $96. This is literally 3xing your money. Literally, you could 3x your money with this stock if you just hold it for just 3-4 years. If you put in $1 million, you'll walk out with 3 million, 1,000, 3,000, right? So this is a very beautiful, and honestly really undervalued stock. So we're going to talk about it, look at the numbers here, do an intrinsic value calculation. I'll calculate the intrinsic value of the stock so you guys can know what what's going on with it. But just to be very clear here, we've gotten to a point where the last time we were trading at a price to sales ratio of near 4 was back in 2017. So imagine how much has PayPal gotten better from 2017, 2018 and 19 and 20 and 21 and 22. It's been 6 years, 6 years of revenue, 6 years of hard work, and the company is being worth that of where it was trading at in 2017. Guys, this is just pure, this is just complete nonsense. So this is laughably undervalued. And let's get into it. So a price to sales ratio is when you go ahead and look at the revenue and in relation to the market cap. So it's never traded this low since 2017. I can't even believe it. All right, so let's go ahead and take a look at PayPal's income analysis. If you look at PayPal here, they have $25 billion in revenue. Now I know this number seems a little big here. These numbers are in millions. Their cost of revenue is $13 billion, 13 and a half, right? 13 bill. And then their gross profit is $11 billion, close to 12 billion. Their earnings is $4.2 billion. So this is a type of company that is different than what we normally talk about. Usually companies like this tend to be hard to find because I have to really look deep. For me to find Clover Health in a very overvalued market, I had to really dig deep. I had to really, really go in there and find it. Something like this is an amazing company that's free cash flow positive. In fact, let's just take a quick sec here to take a look at what am I talking about. Look at and I'm going to be going over this again here, but look at the consistent revenue from 2012 all the way up to 2021. Look at this consistent stepwise revenue. Honestly, don't even pay attention to this. Pay attention to 2016, because that's when they diverged away from PayPal at 2015. Okay, just look at the numbers here: 10,000, 13,000. 10 billion, 13 billion, 15 billion, 17 billion, 21 billion, 25 billion. Guys, they are growing. They are growing beautifully here. And it's not like their net income is bad. No, guys, their net income positive. Look at the net income here. Go ahead and take a look at the free cash flow. This is a free cash flow generating machine. There's a lot of good happening within this stock right now. And with the whole Venmo, with Amazon, and all these other things that are going to be coming about, PayPal, it is a tremendous, tremendous business to get into, especially at these prices. You would be completely mistaken to purchase any other stock and have not PayPal within your stock during these very hard times. Foot Locker's another one. We're going to be talking about this. Hopefully we have some time here. But there's a lot of good stuff with PayPal. Okay. So grab a drink and we're going to be calculating the intrinsic value. So let's go in here. Let's take a look at PayPal's key fundamentals. So they got $25 billion of revenue and they have $112 billion in market cap, which we should know because we already concluded they're trading at a 4.4 times price to sales. And we already talked about how that's undervalued, because the last time they were trading at a price to sales like this was back in 2017. Not even the 2020 pandemic, guys. We are more undervalued than the 2020 pandemic. Like, this is legitimately beautiful. Now, we may be headed for some dark times in terms of the 10-year federal note and the inverted yield curve. We might head through a recession. PayPal may even hit $50, $60, $70. And the beautiful part about this is, it's always important not to put in your money all the way. It's always good to just dollar cost average and dollar cost average down your way to the bottom and on the way to the top. So now that we went ahead and taken a look at this here, a PE ratio is, an easy way to understand it is I have to spend $27 in order to get $1 back. But we tend to use price to sales here. Okay. So now let's take a look at the financial analysis. Unlike AMC, which is a terrible stock, this is a high quality stock. This is a business. This is not a broken down, bankrupt popcorn movie theater chain that delusional people are just holding and hoping him. Right? This is a real business, guys. Okay. They got short-term assets of $52 billion with short-term liabilities of 43. They can afford this, and based off of their business, they'll be able to tackle it. They also have double the amount of long-term assets in comparison to their long-term liabilities. Now, what is worrisome though is their short-term assets definitely have a hard time competing with their long-term liabilities. It's pretty up there, but they're such a free cash flow generating machine that they're not going anywhere. Again, this is the type of business you want to invest in. I'm analyzing this for all my Mastering Stock Market students and for all the people at Al Stock Alerts down in the Patreon link down below, which is powered by here. Again, this is what this video is sponsored by here. I want you to just basically focus on the revenue here. This is the stepwise consistent revenue you want to see. These are the stepwise consistent gross profits you want to see. It's stepwise. Again, this is 2015, 2016, 17, 18, 19, right? And again, they diverged away from eBay at 2015. But look at this, guys, right? There's not a lot of people that are going to be watching this video. I hope that you can go ahead and subscribe and hit the like. But the reason why they're not going to watch this is because it's a boring stock. And by the time it goes up to 200-300, then people are going to start buying. This is the time where you want to buy PayPal. It's when literally no one talks about it. No one wants to touch it. This is the time. So we're going to go over the TA. We're going to go over everything here, but this is the type of companies you want to invest in. And this is the time to do it when they're heavily undervalued. So if you look at the free cash flow, which we already talked about here, the free cash flow is freaking beautiful. The free cash flow is operating in capital and free here. It's slowly going up. It is a very healthy business. If you look at the net income, they went ahead and started decreasing, which is one of the reasons why the stock went down, which is why I was the only YouTuber that said, hey, the price target's at 185 way back when. And people were like, no. Well, yes, right? So if you look at the active accounts, though, they're consistently growing, even at this rate. Again, if you looked at the book 0 to 1, Peter Thiel, who was the founder of PayPal along with Elon Musk, the CEO, David Sachs, which you guys probably know of, if not, take a look at the All In podcast. They were doing a DCF calculation, which is what I'm about to show you back in 2005. They analyzed all of these metrics way back when to look at 2020, 2030, isn't that crazy? Which is what we're doing for Clover Health. I know it sounds crazy, but this is how money's made. All right. So long story short, now let's go ahead and let's switch to our artificial intelligent technology and let's do some research here. Okay. So I'm going to go ahead. I'm going to move the mic here, get my keyboard and Please let me know if you can hear me. All right, so we're going to go ahead and take a look at the projections here. Again, this is our artificial intelligent technology. You can type in any ticker symbol you want, and it'll basically help you research it and send you back a message of what ticker you want. So we're going to go ahead and look at projections, and we're going to type in the ticker symbol for PayPal. By doing that, it's going to essentially return to you a Monte Carlo projection for the specific code that we use. What a Monte Carlo projection is, essentially, is it basically perfect. Thank you so much. What a Monte Carlo projection is, and this is just see how quick and responsive this is. It basically predicts to you future price movements within a 30-day span. Okay, so what this tells me is that it's telling me that based off of the models, we might see PayPal go as low as $82. And this is your bear, your base, and your bull case. Isn't that interesting? So we may see some more downward direction when it comes to PayPal, okay? Which is good. You can go ahead and dollar cost average. And I just want to stop right here really quickly and say, it's important to use multiple sets of datas. And the more data sets that you have, you'll have a confluence sets of data. Confluence means they all align. And if they all align, it just means that your probability of success is higher than that of someone who did not do any research. So you have artificial intelligent analysis, technical analysis, fundamental analysis, and sentimental, looking at what other people think. So there's the Monte Carlo projection. Now let's go ahead and let's look at the support and resistance levels based on different time frames. Again, this is all powered by our artificial intelligent technology. M stands for minute. So we're going to go ahead and take a look at the minute. Now we're going to pull this guy up here. And as you can see, the PayPal stock has been going down to a line of support at $93.18, bouncing up, passing the resistance, but having a tough time at the $100 resistant marker here, then oscillating back down. If it breaks this $96.50 resistance right here, we're expect to see $93.18, which is indicative of what the model's predicting. In fact, it's going down in the lower 80s region. Now let's go ahead and take a look at the hour chart. Again, you look at different charts here to see what's going on. So the hour chart just basically tells you, hey, it broke the 105 resistance, expect downturn. Okay, great. Now we know though the 105 though is a level of resistance now. It's no longer a support. Then we have all these other future supports to take a look at. Okay. Let's go ahead and let's go to the day chart. D for day. So same thing, that there's a level of support at $96.57. Now, what's the exact number of the stock? Let's take a look at it. $96.87, $97.28. So it's hovering right above that. If it breaks, again, expect some downturn. Now, lastly, let's take a look at the weekly chart by just hitting W in the PYPL ticker symbol. By doing that, it gives you a little bit more data, and that's why I like the weekly charts. Look how beautiful. And you can search any stock you want. I mean, this is just so powerful. You have it literally at the palm of your hands for $10 a month, less than that. Anywho, as you can see here, it's hitting the $96.57 support level here. Oh yeah, get yourself a drink. In fact, I'm going ahead and getting myself a drink here too. So as you can see here, once it hits this level, once it breaks this level of support, it obviously is going to turn into a future resistance. But what you can see here, the next level of support is $78.14. So we may be experiencing some more downturn on the PayPal stock, possibly 78.14, who knows? But yet again, this is great for you, so you're not surprised. You have more data. You have more data, you have a plan, and you can execute. So now that we went ahead and did all this here, we had one of our students here type in weekly. I don't know if they were correct, and maybe I said it wrong, but yeah, we have one of our students here. It's really cool. We have a beautiful community here. So now let's take a look at dark pool levels here, and let's do PYPL for dark pool. Okay. by going into the dark pool levels, you're starting to see a lot of, these institutional big money folks have been buying heavily during this region. Again, guys, this is 531 million shares, 237. These are a lot. And, I'm just really surprised. They're like buying up the company here. I mean, there's only so many shares available. So there's a lot of buy-in orders right now. They're literally buying out the company pretty much, okay? So there's that. Let's go ahead and take a look at another signal here that we have. And again, all we got to do is just type in the code, which you have all the codes here when I learn our AI system. Just try to see what's going on in terms of the puts and calls, at what price strikes, and just try to understand the dates. So people have long-term call expirations in 2024 of January at $130 strike price. So then people are definitely bullish. Obviously, it's going to grow in the future. Duh. But as you can see, it's good to see this. But, for the short term, we're looking more at a different strike price here, which is good. This is good. This is honestly good data. Okay. So let's go ahead and do more. So as you can see right now, there are more calls than puts. The sentiment's slowly changing for PayPal. But you know what? It's interesting because our Monte Carlo projection says otherwise. So this is good to know, though. There is a battle between bulls and bears on this stock, which makes sense because it's totally undervalued. Yeah, I'm really sorry about this, about the whole AMC thing. And, this is just my personal opinion. Who knows what could happen with the stock? It's just when you see the insiders sell, and they're selling $750,000 to $1 million for AMC, not for PayPal, it's either going to be a share dilution or they just lost conviction. So now let's go ahead and take a look at our algo flow. This is expensive. Usually this costs $150 a month, but it's included within the Patreon package. So by doing this, let's take a look at the algo flow here. And as you can see here, the stock price is going down, but the algo score in green is going up. This is a bullish indicator. This is extremely bullish. Now let's go ahead and let's do a algo score of 5. Look at a more wider range. Again, the algo score is going up while the stock price is going down. This is extremely good. This is a bullish divergence. This is really good. This means that we're bullish on the PayPal stock. Okay. Now let's go ahead and look at the total dark pool and let's see what's going on here. Okay. So these are all of the shares being bought right now, and sadly, retail is selling this. I mean, we're talking people in their retirements, and they're just selling the stock here because they don't know nothing about the stock market. That's how they freak out, they sell. But look at the prices. These dark pool data are coming in these block trades. We're talking millions of shares. I mean, a million at the current share price, that's $97 million, 97 here, 30 million here. A lot of money stepping in, and it's important to have this data so you guys are well equipped. And usually this data costs a lot, and I'm taking a hit for it, but I'm definitely wanting to provide it for the community here. Okay, so let's go ahead. Bearish of cases. So I think the faster we hit a recession, the faster the rebound. And I agree. A lot of analysts, they just follow the wind. They downgrade when the price goes down, and they upgrade when the price goes up. It's complete nonsense. No, yeah, no. Thank you. Thank you. Honestly, yeah. I don't know why you're thanking me. It's a privilege. Oh, you're thanking me because of the yeah, dude. I'm so selfless. I'm like, I just want to help. That's all. I'm like, why are you thanking me for it? Okay, so yeah, AI prediction for the PayPal stock. If you look at our artificial intelligence technology, it says that intraday, you might be able to get some really good swings for all the day traders out there. But if combined though, it seems that with the Monte Carlo projection, it seems that we may be a little bearish for the PayPal stock based off of the AI, using the artificial intelligence analysis. Now, utilizing our technical analysis in terms of what's going on with PayPal, let's go ahead and take a look at this. In terms of PayPal, we're below the 100 MA, 200 MA, 20 and 50. Double outside engulfing candle. These are for TA people. And what that essentially means, there's a strong downtrend on the stock, which means that, there's a bearish sentiment based off of the technical analysis principles. So now let's shift gears and let's go to the technical analysis. Again, I'm going to be using numbers from 2016 and on because 2015 is when they got diverged away from eBay. So we're going to be using these numbers, right? And we're going to be using the net income from those, 2016 and also the free cash flow and then on. So that, so you guys know exactly where I'm getting the numbers from, okay? I'm going to go one step further and we're going to go ahead and take a look here with their projections that they projected out and then also some projection models. We're going to see where are they going to be in 2024. So we're going to project out a little bit more right now. We'll do two different types of calculations, one projected based off of what we have and the other one projecting out to 2024. That should be good. Yeah, no, you could definitely, yeah, that's beautiful. Yeah, I'd love to one of these days do a Zoom call and we can all just kind of work together on our, do like a course member live stream or something and just look at how everyone else does their intrinsic value calculation. And I appreciate that, Julio, I really do. Yeah, we're working hard, and we're just trying to provide value like no one has ever seen. We are in a bear market now, so there's not a lot of people that trust the stock market. But I'll tell you, psychology in the market changes. This is when you want to buy. So it is what it is. Retail, unfortunately, never learns, but this is why we made this channel. All right. So then now let's go ahead and let's calculate the intrinsic value. So back here, let's look at net income. Back in 2016, they had a net income of around 1.4 billion. Again, these numbers are in millions. Let me go ahead. So you guys hear me, right? Sorry. These numbers are in millions. Let me get closer to the mic, right? So 2016 here, and then in 2021, sorry, I was leaning on the keyboard here. 2021, they had $4.1 billion, so 4169. And again, I'm just basically getting these numbers directly from here, literally directly from here, okay? And again, if you guys are interested in our intrinsic value calculation, this is proprietary copyrighted information. This is brought to you by the Mastering Stock Market course, which is also in the link down below. So they're growing on average at a 24% year over year. Again, they're probably doing better now, but again, this is a very customary, very conservative way of looking at PayPal. Okay, so now let's go ahead and we'll alter it based off of some other components that I'm going to be adding. So now let's go ahead and add their free cash flow from 2016 and on. It doesn't matter where you put it. Honestly, it doesn't really matter because it just takes the average. So I'm just going to lay it here. 2489. You're going to start seeing this calculator update. Okay. Oops, sorry. 1864 4660 3857 4988 5432. There it is. Okay. So now that we updated it, now we're going to go ahead and look at the outstanding shares. And the outstanding shares they have right now is 1186. So let's see. Again, it's going to give you a bull, a base, and a bear. It's going to graph it here. The only difference is the base is going to be orange, okay? So here is the intrinsic value of the PayPal stock, okay? We got $210 for the bull case, $145 for the base case, and $107 for the bear case. Now, a lot of analysts, they probably finally corrected their intrinsic value calculation, probably based off of the real numbers. But if you remember, and if you recalled, I created a YouTube video about PayPal, and everyone's like, no, you're too conservative. Again, at All Stock Trades, we give you the truth. We don't like to keep sending the stock price higher. We give it to you of what the actual worth of the business is. Now, this is what it's worth in today's present value. I mean, this should be trading at least $145. Okay, that's where it should be trading at. Okay, now let's go ahead now and let's project out to 2024. In 2024, let's see here. Give me one moment here. Let's see here, just doing some math here. So now let's do some, in order to project correctly, we need to see the ratio between this guy and the net income. So we're just going to take some numbers here and try to get to $4,169 here. Okay. Well, actually, it's fairly simple. The ratio is simple here. So they're currently making $25 billion. Oh no, let's be accurate. Let's be accurate. I don't want to. So let's do 15%, 18%, so 4,500. This is let's do about 17.5%. So now I'm projecting out to 2024, which is when things should start simmering down. Crazy world we live in, guys, I tell you. There it is. I think this is a fair 16.5, right? Yeah, yeah. 4,100? Yeah, that's good. So they're expected to make $41 billion by 2024. Now, again, this is through different types of mathematical modelings. I personally am just, I think they're going to beat it, but we'll go ahead and give them 41 billion. So they should at least have 6642, so $6.6 billion of net income by 2024. So we're going to go ahead and do 6642 by 2024. Okay. And by doing that, on average, they'll still be growing 21%. And then if you take a look at that, their price now, which is actually went down $171 for the bull and $119 for the base and $89 for the bear. So that basically tells you what people are essentially experiencing right now. We're hitting a almost 15% discount rate on a company that is free cash flow positive and net income positive. Again, their net income has been slipping, which is what we suggest right now based off of the calculations. So I would say based off of these numbers, this is why probably the sentiment has been bad as it's been dropping. And it honestly makes sense. Now, if they start raising prices and we get overwhelming inflation, then the perpetuity model should hover at least around 4. But based off of the interest rate hikes, we should definitely get back to 2, probably in 2023. So long story short, if I were to just say based on the numbers now, my final conclusion for the PayPal stock, utilizing numbers that they have for the net income back in 2021, just utilizing these, it'll be 4169. This is what I think. Oh, hold on. What's going on here? Interesting. I must have did something different here. 3.2 for the TTM. Yeah. Let me take a look here. It's about right, honestly. So we're hitting the bear case right now at $85.21. And then based off of our technical analysis that we saw, and again, I'm doing this with you live. I mean, this is how I evaluate companies. I go back and forth and I say, well, what about this? What about that? This is what it takes to be successful in the market. You really have to always challenge yourself and think. So the $78.14 was the resistance here. I'm just trying to see if there would be a bottom, where would it be? And if we take 85.21, and I'm trying to see here, and I'm being extra bearish, guys. So this is just me being very conservative. Yeah. Let's go ahead and switch this to 2021, because we did it for 2022, which is why it came out like this. We're assuming that they'll keep growing at that rate. So these are the numbers, okay? But let's be a little bit more calculative here. So let's take a 20% margin of $107.85, okay? So let's do 107.85 cents multiplied by 20%, which is insane. Okay, and let's subtract it right now from 107. So I would say the lowest that we would possibly see PayPal based off of all of these calculations would be $86.28, and we're at a 52-week low of $92.25. So yeah, which is amazing, because look at the 2020 crash, $86.68, $86.28. Look how accurate this intrinsic value calculation is. I mean, you guys see it here. Did I even look at the stock price? This is fundamental investing. This is the power of fundamental investing. It always, behooves me to see how beautiful this is. 86, literally, off of literally 20, 30 cents. Unbelievable. Okay. So I expect there to be more downturn. However, with this whole war going on and everything, we could see it touch the $78.14. Wow. I honestly didn't know that. That's terrible. Well, you should go with your credit card company. Use PayPal what I do is I just purchase something off of PayPal. I use a credit card, and I just if I get scammed, I just report to my credit card agency just to backtrack PayPal. So I have like 2 layers of security. But all in all, this is the over-ending conclusion of PayPal. This is our intrinsic value calculation. I hope this was educational. I believe this was the first slowdown video of me basically doing, it was their credit card. Yeah, you see, that's probably why they got more control over that crap, right? Yeah. Put it here. That's very funny. Yeah. Not like your crying face is funny, but not like the situation. But other than that, yeah, this is the first time we've ever done a slow live with a real company, a company that's mature. And as you can see, our intrinsic value calculation is extremely reliable. I'm very proud of it. It's a work of art that we've created here, and cannot wait for all of you guys to try it out here. And yeah. It's beautiful. So yeah, investing is like an art. If you haven't realized, it's just this kind of constant going back and forth, looking at the holes of a business, and it's really beautiful. So I hope this was helpful. And all right, guys, yeah, I will see you on the next one.